Willie, we have a lot to talk about, mate. But firstly, congratulations on becoming a daddy.
Oh, thanks, Peter. Yeah, it's she's so cute. Yeah,
Man.
yeah. It's
Wow.
I have new respect for women, what they have to go through to bring a baby into the world. I cannot believe there's been 8 billion people born this way.
Yeah, dude. Listen,
Yeah.
honestly, I used to do that typical bloke thing. Think I'm at work all day, yada yada. Like when I had to actually raise the kids, when I separated, like I realized how hard it is. It is the hardest job. It's way harder than going to work is a luxury compared to being at home raising a kid. So big up to all the mothers out there.
Yeah.
Me and Willie support you.
Mm.
But man, she's cute.
Thank you. And also, I feel like I'm in a steam ground. You're like suddenly the famous man on the world right now.
Well, I can't believe you're so dressed down for this. You should have put a suit on.
I know. You're used to being greeted with people in suits, right?
Dude, the whole thing's weird, man. I can't fucking make any sense of it. It's so weird. But now I'm like back in Bedford after like 6 weeks of weirdness and indie races, Miami and presidents, and I'm just back to normal life and going down to Tesco's and getting a loaf of bread. Normal life. And my kids yelling at me and don't give a shit about anything.
I think my favorite was seeing pictures of you in your Metallica t-shirt and tats, and then Twitter doing memes of you appearing in, like the meetings with the Fed and so forth.
Well, like people are so pissed off about that. Like you're so disrespectful. Look, the first thing is like people didn't realize I didn't just turn up in a Metallica shirt like a moron. I messaged the president's brother and I was like, because I didn't have any smart clothes with me. I'd flown from New York in. I didn't have any laundry done, and I didn't have a suit, and I wouldn't have worn one anyway, probably, but I just had nothing. And I was like, I messaged the brother and I said, is there a dress code? And he was like, no, you just wear what you want. So as a joke, I put even a Metallica shirt, and he went, sure. I was like, well, fuck it, I'm going to wear it now. But they don't care. If Bukele, like he doesn't care about this stuff. He cares about goals. He cares about delivering for the people. He understands social media. Like this is the guy who campaigned in a backwards baseball cap and did a selfie at the UN. Like he's in touch with real people. So, but anyway, the memers had some fun.
Yeah, that was fun.
Anyway, man, we got a lot to talk about. The first thing I want to put to you, though, okay, I'm going to hit you with a surprise, but I'm also going to put some defense in there as well. So I have to view all the YouTube comments because there's so many spammers. Like if you just let it go, it ruins it. So I just like approve the proper ones and I delete the other ones. So I get to see them. And there's been some criticism this month where people are saying, well, Willie said this was happening, now this happened. And I just like, my interpretation, I want to put it out there, is like, if you're trading, knowledge is like a weapon, right? The stuff you're doing, the on-chain analysis, but it's not like a crystal ball, right? It doesn't predict future events. You can't predict a FUD narrative. You can't predict Chinese miners closing down, right? So you can use, my interpretation of it, Willie, is you use this data as a guide, but if market conditions change to events, then you have to react to that. Is that fair?
Yeah. I'm like the reads I do on chain, I do them typically with my newsletter at least. That's every 2 weeks. And what happened was I issued a bullish structure. It was kind of tentatively recovering, and I thought it would be going bullish. Well, it had flicked to bullish, and then Elon Musk famously did his energy fossil fuel tweet, which tanked markets immediately. Because it was, I don't think it would have had the same impact if the market was with upward momentum and that momentum was strong, but it was just recovering from the previous sort of few weeks of miners losing hash rate in China, and we had a deleveraging, and so that hit it. And then I came out with a forecast that was ridiculously bearish. I said this is just tidal waves of coins hitting the exchanges for selling, and I said it would take possibly months to recover. But unfortunately, I think a lot of people were leveraged and lost money. And, you know, I didn't like, there was it was structured bullish, and there was a gap before I said it was bearish. And I think the price had slipped from 55 to $50,000. No, maybe 45,000. And then it carried on down to 30, right? But the forecast did go out, and it said this is heavily bearish. But a lot of people got wrecked. And I've had people, it's kind of interesting in that, like, this bull market, like every bull market, brings in a lot of new traders and a lot of new investors. And I had people say, I lost money. This forecast is very, very inaccurate or whatever. And if you do the backtrace on it, it's 80% reliable, right? That means 4 out of every 5 forecasts play out. And most technical traders that are trading in the shorter time frames using just chart analysis, typically you're right. If you're right 60% of the time, you are really making bank. A lot of traders make bank 50-50 because they have good risk management. And that's the key, is if anyone's in the short time frame trades, you really need risk management. So that's how, I got a lot of flack over that rundown, but also like you'll get flack anyway, because when price is bearish, the markets go very, very emotional. So
yeah,
like I remember the 2018 bear cycle, I was the one saying this is bearish, and I got masses of flack from being right. And so it's just, you can tell the sentiment. Yes, you can tell the sentiment. Just when people are hurt, there's going to be a lot of criticism. So
I know, dude. Like I get it as well. I was blamed for the market crash for triggering Elon Musk, which made me fucking laugh. Like literally people going into my DMs telling me to kill myself and shit. But look, the way I take it, Willie, is that I love your email. I tell everyone to subscribe. I think it's brilliant. But I think I see it as this is you telling what's happening on chain, right? And based on historic performance, these are things you expect might happen. But I still expect market conditions to change. And look, I've only started testing trading this year, like small amounts, right, here or there. But I am going to trade the next cycle, right? I'm going to take what I've learned and do it. But I'm going to take maybe 10% of my stack. I'm probably not going to use leverage. If I do, it'll be like 1.5. I'm going to have proper risk management in there. And if market conditions change, they change. And like anyone listen to this, I'm just going to fucking say it. Anyone listen to this who treats your emails as gospel and puts everything on the line with it and lose a lot of money, well, that's your own fault. This is some analysis, which is knowledge that you can use. It isn't the gospel. It isn't Willy's guaranteed returns forecast.
Yeah, it's really interesting to see a lot of people think that you can actually predict with 100% reliability. I find it ridiculous. I find it, like if you can do 80%, I think that's ridiculous as well. And I think we can only do that right now because on-chain analysis is only barely 2 years old. Maybe you say 3, but publicly it's only been 2 years old. And so it does have an advantage right now, but I even think that's going to get less and less reliable because, like it's just a new field. Not everyone's looking at it, but eventually the signal will start to be a lot harder to read as the whole market. It's all about information asymmetry. So, yeah.
Well, listen,
Anyway.
look, you said that you think the recovery is underway. There's a lot of people claiming we're in a bear market, it's over. I guess both are possible, but you're seeing indications that, there's a recovery underway here. This dip definitely isn't anything I experienced mid-market 2017. There's a definite change in the structure to what's happened, but I've not sold anything. I'm still confident. And look, there's too much good stuff happening. Actually, do you know what it feels like, Woody? It feels like there's a lot of really good stuff happening and a lot of really kind of nasty FUD or big things challenging us. So we have El Salvador making Bitcoin legal tender. At the same time, China seems to do an outright ban and all the miners are switched off. They're like two opposing forces at the same time.
Yeah, and even that is bullish, right? That's like, oh, great. And the whole network got more decentralized. We no longer have 60% of the miners in China, and China can't take control of the network, which was always one of those outlier concerns, right? Like, but imagine if the Chinese government, by decree, claims all the miners and takes out Bitcoin through a 51% attack. That kind of thing, and now that's gone. And even now, all those mining miners, those ASIC miners, the hardware's being relocated to like all the sources of cheap and clean energy in different parts of the world. So, all of the underlying things behind the network, we've got, obviously. You're at the forefront of the El Salvador story of it becoming legal tender. And I think, it's like Bitcoin's now fighting the final boss in the video game. It's really up against the central bankers and much earlier than we ever thought. Which is, what was it? The thing that was quite hilarious is that because El Salvador's decreed this as legal tender, the World Bank, by their own charter, have to accept Bitcoin as payment of debt. Which is like, so it's at the very highest level. We've got institutions that need to face Bitcoin now, which was, I kind of thought this would be another 4 years away.
I know, man.
And so, I don't know. I think that there's going to be attacks on it, like very, very hard out attacks. I even saw that with Tesla back when they, remember when Tesla was the darling of the shorters in Wall Street, and everyone was trying to take out Tesla, and there was just FUD after hit piece on Elon Musk and Tesla during that time. I feel like that's kind of what's happening right now with Bitcoin. That's on a sentiment base, on chain. It's like, I can just see buyers, sellers, and sizes, and it's, to me, it's as simple as we had a lot of buying from about from the January of this year, really, and those guys were very, very large buyers, very high net worth, and some maybe institutional hedge funds, short time frame kind of guys, or even family offices. And the thing is, like, a lot of those guys took their money off the table from that $50,000 to $60,000 range. And so all those coins just ended up on the market. So they were dumped out, ended up, having the inventory on the exchanges, the speculative inventory, just go up. So I imagine just for every coin that's sold, obviously, there's a buyer. So I guess speculators bought those coins. And now we're in a very speculative phase. And those coins are slowly being reabsorbed by long-term holders, slowly, and it's very much structured like on-chain. It looks like the COVID crash and then recovery, which took 8 weeks. We had a massive dump out of what looked like long-term holders, those people that bought, up to 6 months ago, and they sold for the very first time, unloaded their coins, and the buyers are smaller guys. It's retail, and we're not seeing, unlike the coins are moving to stronger hands, long-term investors, but we're not seeing the same amount of pure rate of coins moving off the exchanges into cold storage like we saw in COVID. So that's that. So price right now is going sideways bearish. It's like chopping along sideways bearish. It looks like what we call a Wickofian accumulation like price pattern. And so if that plays out, then we should have that last wick down to the 28, 29 should have been the final test of the bottom. If that continues, everything on chain looks like it's in recovery, right? In fact, we're getting like a bullish divergence. On chain's going bullish. Coins are being sucked up into strong hands while the price is driving downwards. And the last time we saw that was in late January when we had the first dip of 2021. And on-chain was diverging upwards as the price was going down, and then we rocketed upwards. So that may play out. I think that we still need to see what happens in the next 2 to 3 weeks. Like, I do think we're in the next couple of weeks at least, we're in an upward trajectory. But like, it's recovering. We just don't know what's going to happen in the next, obviously in the future. If we get another round of people dumping coins, then that'll destroy this accumulation. It could push us down lower. But in terms of fundamental metrics like valuations, like MVT or stock to flow, we're already heavily discounted. So it's like a cycle that, unlike any that we've seen, and I mean that, like, people are templating this thing to 2013 where we had a double pump, but underlying structure is completely different.
Well, it's just the bullish news is extreme in the sense that we have a country making Bitcoin legal tender and Michael Saylor buying, I think he bought all the Bitcoin. And then then the FUD is super extreme in that we have Elizabeth Warren complaining about energy, Elon Musk complaining about energy, and Chinese miners being turned off. So it just feels like the normal bullish and bearish news of a normal cycle, but just of extreme ends of it.
Yeah, and it's like the buyers that bought that push price up were obviously they were very new and they were very prone to the FUD, no matter how bullshit it was. It's utter bullshit, but they bought it. And I even noticed. Remember Michael Saylor and Frank, what's his last name? There was a debate that they did on gold versus Bitcoin, and he fudded. Michael Saylor won that debate clearly on all points from logic and fundamentals, and yet Frank attacked Bitcoin on there's no way the authorities will allow Bitcoin to prosper. And I noticed that the FUD actually worked. People started, the price dropped after that debate, and I think that a lot of these new buyers were, you get an easy 2 to 3, even 4x over a number of months. You're probably gonna be sensitive to like, oh, this is scary. I'll take the profit now in a highly volatile asset. So I don't know, but I do like how it is like the small guys that are buying it right now. It's it's very good for the network.
Well, a recovery feels good, and like I say, it's like 30K seems to be defended pretty well. I'm not in that point where I'm thinking things are over. There feels like there's too much good stuff is still happening. And like you said about the China news, to me, the China news is positive because it removes one of the FUD things that people talk about. We're centralized around Chinese mining. So we get rid of that. Once, one of the things I'm really looking forward to is a a lot of the movement of the miners to be using this kind of clean energy, because I think all we'll have left is like terrorists and drug dealers. That's all we'll have left.
Yeah, no, it's really interesting. I've noticed this in markets is when the thing shakes out, something that's bullish is initially bearish before it goes bullish. So, for example, the 2008 financial crisis, like all the banks were kind of getting wrecked, right? And if you were a gold bug, you would be sitting pretty because, like, everyone's gonna go into the safe haven asset. But of course, gold sold off like crazy. You got wrecked if you were holding gold because, these kind of more urgent impacts happen where everyone sells US dollars, deleverages, and everything crashes. And then the thing sort of recovers. And of course, gold went on to, like a 4-year bull run. And we saw that with COVID, right? Bitcoin was exactly what you want when the whole market crashed and the money printers started printing on overdrive. You wanted an inflation hedge, but Bitcoin halved also, right? Because everyone was at peak fear. And the same thing now with, China miners, everyone's selling off. But ultimately, the fundamentals backing Bitcoin because the whole network's becoming decentralized and stronger. So, yeah, a dump before the pump is this happens a lot in markets.
One of the things I haven't actually, and this is pretty amateur, but I actually haven't had a look at the hash rate since they've turned off. I'm assuming there's been a bit of a drop. Yeah. Okay, so look, the hash rate's down to. Hold on, it's down to what it was in when it dipped in November 20 and about what it was a year ago. It's like 3 years. It's funny when you look at the hash rate chart, it actually, yes, look, there's a big drop, but I feel like that will recover because from what I've seen online, that these miners are looking to pack up their equipment, their ASICs, and move them elsewhere.
I'd just also be wary of the hash rate because that's reported by the software and it's voluntary. When the hash rate dropped, when like China tripped over the power cord type thing a while back, when they did a number of shutdowns because of some sort of routine maintenance or safety inspections, Adam Beck contacted me and said, yeah, actually this stuff is really, you can't rely on it because like it's not perfectly reported. But what you do is you look at how slow do the blocks get processed. And like, so you can look at that and we did get a slowdown. But like we're still waiting for the, like, what is it? We're kind of less than a week left before the Bitcoin difficulty will adjust for that loss of hash rate. So blocks are a little bit slower than normal right now. I think let's have a look at what it's saying right now. Yeah, it's like normally it's 600 seconds, 10 minutes, right? Currently it's closer to right now about 1,000, what is it, 16 minutes, the average block time. So the whole network has slowed down a lot. It hasn't slowed down to unseen levels. We kind of got this, I'm looking at it. We had the same level of slowdown in mid-April when, a lot of the Chinese miners shut down because of the power outage. We're at that level again. So, yeah, but the network's fine. It'll adjust. Another few more days, like within a week, that'll adjust down. And by looking at the reported hash rate, which is not quite accurate, but it looks like we're last at these levels a year ago, like around June. So
All right, so the big question, because this comes up all the time and people talk about it in different ways. Willy, does hash rate follow price or the opposite, or are they just completely disconnected?
Oh yeah, like I had it a while back, but I think the two are kind of, they affect each other, orbit each other in different ways, different things. Price can lead hash rate, and hash rate can lead price in different situations. Like obviously, when the hash rate drops suddenly, we saw in April, price did follow it because there was fear in the market, and but then obviously there's the other effect in bull markets. It's economically incentivized to turn on more miners because the premiums are so high when you mine Bitcoin at the higher prices. So the two are related. I wouldn't say one leads the other and vice versa. Like they both kind of have their effect and that they're in orbit. But I remember reading a tweet by someone who was much closer to it. He broke it down very, very, very well. But just from my view of it, I've seen both happen. The price follows the hash rate follows price on slower fundamentals of price going up. They're different mechanisms.
Interesting. All right, well, listen, I spoke with Lynn Alden this week, and she said that the Fed may slow asset purchases and that the S&P and NASDAQ are dipping down and the dollar index is strengthening. Do you track these items at all? Do you look into this? Does this affect any of your decision making, or do you just purely focus on chain and narrative?
I don't even focus on narrative. I focus mainly on chain. Very little do I look into the greater macro. Probably it'll be more important in the future. But everything that happens in the macro world, unless it's sudden, unless it happens within a day because of some Fed announcement and like stocks tank and then it pulls down Bitcoin in a trading correlation. But like that stuff is very short-term focus. Like if like what you look at on chain is that the sort of buying and selling that you see long-term investors doing. So if there is like fear in the market because of XYZ impact on the macro landscape, then presumably investors will sell, right? And you pick that up on chain, and typically that happens and gives you a bit of lead time before the price follows suit, because those early sellers, you'll see that happening. So hopefully, let's see how it works in the future. But up to now, it's been, I could just have my blinkers on. I just, like some chartists say, I don't care about narrative or news cycle. I just look at what's happening on the charts, and I know whether people are selling or buying. And it's a little bit like that.
Have you looked at the grayscale stuff at all? Is that relevant? Because 16,000 Bitcoin, about just over $600 million, is unlocking in July. That's the biggest unlocking of grayscale Bitcoin to date. Do you look at that? Do you consider that? What the pressure that will have? Will that reduce the pressure to sell?
Hold on, what are you saying with that? There's a window to unlock.
There's an unlocking, yeah.
I thought the grayscale doesn't unlock or does not sell unless, other than for its management fee, right?
No, there's certainly, because that was how the arbitrage was played. But the fact, because it's not an ETF, it isn't instantly liquid. When you buy the grayscale coins, there's a certain period they're locked up for.
Are you sure? I'd have to. Yeah. This is like Grayscale has never released coins, and that's in the prospectus, isn't it?
I mean, I'm on cryptopotato.com. Let's try and get a better website. Fucking hell.
There are 6-month windows, I think. It's where you can buy, the insiders, the institutional guys can buy like Bitcoin and bring it into the fund, I think.
So it's not the coins that unlock, it's the shares, right?
Yeah.
And the shares become liquid. So that's probably what it refers to. I'm a little bit out of my depth there.
Okay, so then it's like this: the coins stay put because it's Hotel California for those coins once they're in, but then the amount of shares that are issued around it adjust. Gotcha. Well,
I mean, the way it's put is that with the second quarter of 2021 almost done and July just around the corner, Bitcoin might be heading towards a highly volatile month and Grayscale could receive the blame. This is because one of the largest unlock-ins from GBTC will take place in the middle of the month, as accredited investors will receive access to over $600 million worth of BTC. But I think it's the shares that unlock, and these shares can be traded.
That's wrong. Yeah. So those coins will never be dumped down on the market.
No, but what I mean is the shares. The shares become liquid, right?
Yeah. So that what it means is that the premium changes. Because like right now, because there's a set number of shares, if there's, like right now, you could buy the shareholding to access a claim on those Bitcoins at great discount. Up till, just recently, over the last few days, it's closed. The premium the discount on those coins are now closing, and it was very market. I think Kathy Wood hit the she spammed the buy button on that latest dip. Was it $60 million? I can't remember how much she bought. It was a decent amount, and the whole premium has closed. And what I look at is the premium, really, because the premium was actually at a premium. It was more expensive to buy Bitcoin through Grayscale than actually in the open markets. But for the greater part of, I'll just look at it right now, Grayscale premium. The greater part of the last few months, we've seen a deeper and deeper discount.
Melton tweeted about it. So she put from mid-April to mid-June, 139,000 Bitcoin worth of shares have unlocked. So it's the shares, and there's another 140,000 Bitcoin worth of shares that unlock through the end of July.
Yeah. So the premiums have been dropping to a discount sometime in late March, and so we're that premiums just as like you can look at this as institutional holders have been dumping Bitcoin on Grayscale, meaning they're selling their shares. So the shares were getting cheaper and cheaper and cheaper than the actual outright cost of Bitcoin that they represent, to a point where it was peak discounted at mid-May. And that's been sideways recovering since then. And of the last 3-4 days, that's made a huge jump from negative 14% to now 4.8%. So it's like a 10% reduction in premium discount. So that's showing demand come back into the market. As that discount was getting deeper and deeper and deeper, it just means people were selling and selling and selling the shareholding. But those coins could not actually be unlocked out of the holdings and dumped onto the market. And so you kind of saw this effect where the price of Bitcoin was being, the sell pressure was being absorbed by Grayscale in that premium. And it wasn't being dumped onto the market, but you could see institutional demand dropping. But now it's done the other thing, right? Ever since we had this sell-off, or it looks like around when we hit $45,000 and started bottoming around the 30, it turned around, went flat, and started to go the other way. So it looks like people are now buying the dip according to the premium. As for that unlock, I don't know exactly how that plays out on the market. What would happen? You get to sell your shares?
Yeah, because that's what I don't understand. Because you can sell the shares on the market, right? But if you sell them back to Grayscale, do they then have to sell the equivalent Bitcoin back? Like, do they hold a perfect balance between or does it? See, I don't fucking know how any of this works, but.
Yeah, I'm not up clear of the details, inner workings of how the Grayscale stuff works. But if they're getting, I don't want to comment because I'm not an expert on that stuff. Yeah.
Sure, the YouTube, I'm going to leave it to the YouTubers to go, you fucking morons.
You got to be careful of talking about stuff that you're not really that good at.
Hold on, I've made a career out of that. I'll talk to Lynn about it. Anyone listening who's pissed off that we don't understand this, don't worry. I'm going to talk to Lynn about it. I'll get the detail on it.
Mm-hmm.
All right. Listen. So a couple other things I want to talk to you about. I kept seeing this death cross thing. Is this a real thing, or is this just like one of those things that people talk about? Is it real?
It's a real thing in traditional markets.
Right.
It doesn't really work.
Can you explain what it is?
It's just it's just you might have. I don't even use it, but it's two moving. Is it 50 and 200? I don't know. It's two moving averages.
50, the daily moving average.
Okay, so there's two moving averages, right? And one's a slow one. One's a fast one. When the fast one crosses below the slow one, then that's sign of, that's a death cross. They call that the death cross, and that's get the hell out. If you're in a traditional market, you do that. If you backtrace it on Bitcoin market, death crosses like by the dip more often. It's like, I can't remember the details, something like four times to one. It plays out as that's the bottom. And the thing is, Bitcoin's market is very, very different from a traditional market, because if you think about most markets, they tend to be at saturation. Maybe with the exclusion of tech stocks, early tech stocks. Bitcoin's like an early tech stock, like a really early tech stock, where it's at 2% penetration of its maximum saturation. So this thing's growing exponentially. So you get a death cross against a fundamental that's growing exponentially, like number of users, this thing on board doubles every year, even in a bear market. So like, these death crosses don't tend to work because the underlying upswell is an exponential growth. So it doesn't really work on Bitcoin's price chart, that's for sure.
All right. Well, fuck the death cross then.
Yeah.
Also, another thing that I've noticed is that the meme pool's meme pool. I always say meme pool because I'm dealing in memes, but the meme pool's empty. The price is to move into block one is the next block is like below $5 at the moment, which is quite low for a bull market. And that kind of makes me think, is this part of the recovery, and that a lot of the selling's been done, so those coins have moved? Should we not see the mempool filling up with people moving coins, buying more and moving back off? Like, do you track the mempool in terms of trading, or is that just a...
Yeah, I track it. I've got it right up right now.
Right. Tell me what you look at with the mempool, because what I saw is like we're seeing like bear market prices, and that made me think, has this all dried up? Because my expectation in a bull market, you see movement of coins both ways.
In a bear market, mempool just bottoms, right? Just completely just sideways bottoms, because there's very little transactional activity. In bull markets, this thing blips up, it gets congested. Usually on a big rally, it gets congests, and then on a pullback, it zeroes out again. Okay, and if I look at the 2017 picture of the mempool, you get these spikes on every rally, and then it would zero out. We zeroed out one. In 2017, we zeroed out 1, 2, 3, 4 times. And on every time it zeroed out, it was bottom of dip, right? No one wanted to mess with it. And then once it starts rallying, everyone piles in, and mempool peaks again. So, like, I do look at mempool as like a really good time to enter on a dip. If you're positive you're not in a bear market, like that's the first thing you want to determine. Are we in a bear market? If you're in a bear market, then all of your buy the dip indicators are going to get you screwed. Like SOPA.
Right.
So there's all these indicators that say buy the dip, but they don't. Don't buy the dip if you're at the start of the bear market. You'll be a dip if you do.
If we're in a bear market now, that would be quite unique.
It'd be a weird ass bear market because we're not seeing the normal bear market metrics. Like people are coming in. We've got new users at near all-time high. The user growth is near all-time high on the network. We've got all the little guys coming in to buy and stack. People that have holdings of less than 1 Bitcoin are buying Bitcoin furiously. No one's selling. The whales are sideways. The people with 100 Bitcoins upwards, those are the dolphins and sharks, they're sideways. Anyone less than 100 Bitcoins, they're stacking. So that's not normal. Like normally in a top, you'll see the whales have dumped. They've started dumping ages, maybe 6 months back, and the dolphins, the 100 Bitcoin upward guys, they tend to start to unload their coins, but they're holding strong. And then the retail guys, more and more of them coming in, and normally that just stops. Like you go into this mania phase, price just starts to rip upwards beyond the fundamentals. It goes up sheer bullish wall, and we haven't seen that. So it's just got all the wrong signs to be the start of a bear market. Maybe you call this a mid bull market kind of reset. It's not like a dip.
A mini bear market.
Yeah, mini bear market. It's like the 2013 where you did get a decent pullback, and it took months and months for it to reaccumulate and then run up again. It looks more like that on the price domain, but structurally it looks like it looks like COVID. It's like Elon Musk is like the COVID virus, double downing. He's teaming up with China to create COVID.
Well, the other thing though is, Willy, like one of the things I think about is if it becomes too predictable, and everyone thinks this is going to be exactly the same as 2017, we're going to have 30% dips. Each one we're going to come back. Like if everyone thinks the same, then it can't. I almost think it can't play out like that. Because what's going to happen is, well, no, but that's the point. It's because people think it's going to react like that, and people think it's the same. Then the market is reacting differently because we can't all win, right?
Yeah, I've been thinking about this lately, and I've been thinking about like Dan Howard's super cycle. Everyone's saying super cycle, and I'm thinking maybe this is we should call this the last cycle. Maybe not the super cycle, but the last cycle.
The last cycle. That sounds like a film.
Yeah, it's like every I'll just pull up a chart and see a look. How many cycles we had? We've had in terms of halvenings, the halvenings had a fair run. We had the first epoch that ended. We kind of ran up. We did the second epoch was the 2013 bull market. Third epoch was the 2017 bull market. We're in the fourth epoch now, right? And the inflation rate is very low. It's the equivalent of gold. And then in the next epoch, it's less than gold. So the sell pressure from miners is infinitesimal. And a lot of people look at what the miners are doing. I don't actually do that much in a bull market because their sell pressure is nothing compared to the full wrath of Michael Saylor's buying, or anyone's buying for that matter, will just put to bed any kind of sell pressure. It's 1.43% is the inflation rate of Bitcoin. That's not much. And
dude, listen, Michael Saylor essentially owns 1 in every 210 Bitcoins now.
Oh, really?
Yeah, he's got over 100,000, and something like the amount he's bought is something like not far off what the total amount that will be mined next year, or something ridiculous. What is it? Is it 900 a day now, or is it like 8? I can't remember. I think it's 900. So it'd be 450. Let me have a look at this. This calculator. Right, 450 times 365. Yeah, so like he's bought over 100,000. Next year, only 164,000 new coins will be mined, right? We get another Sailor next year.
Oh yeah, and we'll get more than Michael Saylor. You know, that's a thing. It's like I don't even think MicroStrategy is that significant in the share buying and selling, because it's actually that they're influencing people to buy. But yeah, I'm just looking at the inflation rate. It's 1.43, and that's because the hash rate's dropped, so we're mining at a slower rate right now, which is doing wonders for the stock to flow. But you know, this is going to drop to less than 0.75% of inflation. That sell pressure is minuscule. Like already we're in an epoch where the sell pressure coming off exchanges, and I don't mean this people selling on exchanges. I mean the exchanges. I mean Binance. I mean you know, Coinbase. The revenues that they take when they convert that to cash to pay their expenses and salaries and their shareholders, that sell pressure is more than a minus. So
yeah,
we're in dynamics where the buying and selling is of the market is starting to look like it's making the inflation rate from the mining the lesser significant thing. And so I think that's going to have a decent impact on these normal cycles we see where we get this bullish impulse. I think that it's starting to get weak, and you'll see narratives, you'll see fundamentals of nation states doing their thing, and corporate treasury, you know, all these macro kind of impacts will start to shape the price chart more. And in a way, we could see these normal cycles where we love to imprint on Bitcoin start to go a little bit drunkard. And I think we'll wind in a random walk, what will look like a random walk upwards, but without the cyclical sort of peaks that we've normally seen. And already I'm looking at this long-term price chart, and since the 2017 peak, this bull market's all over the place. You know, the price chart is not smooth. It's not anything like the prior cycles. So
I wonder if the whales are even like, what the fuck is going on here? Or if they're all like just sat there in their yachts laughing at us going, haha. You thought
they're probably the latter. I mean,
yeah, you thought it was going to be a 30% dip. We'll just do another 20%, fuckers.
Yeah, I think any large whale doesn't really care at this stage. I think well, like you just see it, they just sell. Whenever it rallies, they sell a bit to, you know, pay for the next super yacht. The OGs sell. It's great for the network. It's really great. The coins are really distributing.
Yeah, well, you say that, but then like Michael Saylor, like I say, it's even more than the 100,000. I think MicroStrategy's got like 100,000, but he implied like himself and entities he controls has like something like 120,000 Bitcoin. Like, so that's a consolidation. Whilst it's good for to have a better spread of coins, but that's also a consolidation. Do you worry about that? Do you think about that?
Yeah, I think about it, and I think it's a red herring. I think that an institutional buy like that is just another word for coins owned by a whole lot of people. MicroStrategy is a publicly traded company. Okay, how many shares does Michael Saylor own? A decent chunk of it, right? But not the majority, but not by far the majority. And of course, a lot of their holdings are debt driven. So actually, it's bought on leverage, and the people who own that leverage, the other side of the loans, have options to take that in shareholding in the company. And if you look at the last issuance of that debt, junk bonds, junk corporate bonds, the people who bought those bonds were corporates that wanted an easy access way to access Bitcoin. And I imagine that a lot of that came out of conversations from his conference earlier this year, Bitcoin for institutions, corporates. I imagine a lot of those conversations took place, and like he did that one to allow people to, CEOs of other companies to just say, I'll just buy my junk bond, and now you've got an easy way in because you can convert that to Microstrategy stock. It's the Bitcoins are moved into a new holding vehicle. It's kind of like the ETF for corporates right now. And so again, that's just coins held by a whole bunch of other corporates, which are held by a whole bunch of shareholders. So these aren't. It's not like Michael Saylor owns those coins. He's custodian of the coins, but he's not the owner. It's a lot of people like to say, like, look at 98% of the coins on Bitcoin are owned by 2% of the addresses, and
we all know that's bollocks.
Yeah, duh. That's like all the coins sitting on Coinbase,
Binance,
exactly, owned by millions of people, right? Owned by 130 million people, those coins. So similarly, these publicly traded companies that own Bitcoin in their treasuries are somewhat like that. So then you get down to you just get down to the real whales that are individual holders that you can see on chain that aren't the public companies, and they are diminishing over the long arc of time,
which is good for Bitcoin.
It's great for Bitcoin.
Great for Bitcoin. Well, listen, there's two more things I want to ask you about. First one's a quick one. Are the Rick Astley's back?
Yeah, Rick Astley's back.
Give you up.
That's right. He's back.
Let you down. He's back.
He's back. The national treasure is back. He abandoned us for a while.
The British national treasure. We love him.
It's like a lot of the of course the Rick Astley is the holder that keeps buying, and
he never gives you up.
Never tends to sell much. That's what we measure. We measure that. And of course, Rick was very, very active over 2021. And then suddenly, like all the coins moved away from Rick to the weak hands, the speculative traders that buy and sell. And now we're seeing that cross back into moving to Rick. And it's that's that chart. If you rehash it and make it less smooth and look at every movement day to day of coins between the two types of holders, you'll see that is the actual structure I'm looking at. This looks very much like COVID. We had a massive unlock by coins that used to be owned by Rick. He got out, and now they're being mopped up again by Rick. So he's back. He's back.
Mm-hmm. Thank you. All right, the last thing I do want to talk about, because this breakdown in the price from 64 to 28 is a nice chunk over 50%. I can tell some people have got wrecked in multiple ways, because there's multiple ways you can leverage. You can leverage on exchange with stupid 10x, 25x, 50, 125x, or you can leverage by, I don't know, going to a service like BlockFi and taking a loan out on your coins so you can buy more coins, which gives you a liquidation point, which I imagine some people got hit when the price dips below 50% of the high. And you can also leverage yourself in terms of just in life. You can take out loans and yada, yada. There's loads of ways you can leverage yourself. And I just feel like we should talk about that just to close out, because, my amount of leverage is, when I did some CFD trading to test it, I literally put $2,000 in. And I think the leverage you get on that's like 3x or something. And I took out a loan when Bitcoin crashed to 17,500 because it just felt like some cheap coins, which are, still nearly 100% in profit. But I don't go onto exchanges, and I don't go on a BitMEX and deposit a Bitcoin and go 10x long or 100x long. And I feel like some people, in some ways, are almost being taken advantage of by some of these exchanges, because all the pro traders I know, like you, like Kobe, like 3x is a high leverage to be playing with. And most people I know are like 1, 2, or 1.5, like 3 is quite high. So can we just talk a little bit more about leverage? What you think is high risk, what you think is moderate risk, the kind of ways you think about leverage.
Yeah. Okay. So,
and I know we've covered this before. Just feels like
leverage is like, it's just cocaine, right? And it's cocaine and razor blades. So like if this thing swings against you, if at high leverage, you can lose a ridiculous amount of money. So you got to have the risk protection in place. So, if you're trading 100x, well, go for it. But you got to know that you got to have tight risk protection. And normally you might, you can do it in many ways. You might just say, I'm going to risk, 1% of my portfolio, my trade portfolio, or whatever. But every kind of trade you do, you need to have, your risk strategy put in place. So, like, I consider 1x high leverage from the trading I do. If it swings against me, suddenly I find myself in a 2x leverage position, because I'm trading like very large, long time frame swings. So I can't really use stops, because stops you can get completely kicked out of the trade. Now stops are something that most traders use to protect themselves from downside. If it swings the wrong way, you might, stop yourself out at a 10% loss or a 3% loss, whatever you calculate that is. And so for me, I find these kind of longer term trades, 1x is plenty. It's absolutely plenty. 3x is like ridiculously high for anything that's a swing trade for me. Because if it goes against you, suddenly you're in a situation where you might be 10x, and then you're liquidated. So like I often look at things like, with 1x leverage, that means that the price can go to half before you're liquidated. And we've just seen that Bitcoin went from 55,000 to 28 was the bottom. So it actually did pretty much halve. And you would have been very close to being liquidated on that 1x leverage trade. And that happened very, very quickly. So,
but like 1x leverage now doesn't feel too bad, because I'd be very surprised to see us in the next few months hit 17.
Yeah, I mean, this is the other thing, is like, yeah, fundamentally maybe not. But do you remember how Ethereum went to 10 cents on Coinbase?
Well, wick down.
Yeah, it wicked down from like, what is it, $900 to 10 cents? That was a liquidity failure.
Didn't they pay everyone back for that though?
They did.
I know they don't have to. Yeah,
they did, but they didn't have to. And remember, earlier this year, their buy button broke. The sell button worked, but the buy button broke, and the whole thing crashed. Right, and then that circled in on itself, and all of the derivative exchanges went into sell-off because they were getting their price feed in part from Coinbase, and the whole thing just fed on itself. And so fundamentally, we're fine. Rick Astley was buying, but the whole liquidity the bottom fell out of it, and so. It's always the unexpected that kills you in markets. And like traders tend to be genius. You have there's three types of traders, really. The first type of trader is a genius because they're making money in a bull cycle, and they don't know that they're actually making money only because it's in a bull cycle. The second kind of trader is actually much more careful, and probably a lot more experience. But then that trader gets wrecked. In a black swan event like Coinbase buy button breaking, which is not really a black swan because that happens quite regularly. But when you have these liquidity failures, you get wrecked, right? And so the third one is one that has that experience and has risk protection in place. And even if you throw some crazy event at that trader, they'll be okay at the end of the day, whether they've positioned themselves so that if it goes against them, it's not the end of the the road for them. So yeah,
I'm pretty sure in that Ethereum 10 cents wick, some dude ended up getting like $1 million of Ethereum for like fuck all. They'd already set up a buy order.
Someone killed it. Now, I've always seen this on the order books, particularly I remember in the early days of Poloniex. There's always some guy that was buying like a ridiculous amount of tokens for a minuscule amount, and you're going, yeah, what's the point of that? But of course, that's the black swan strategy. No one's pricing in the risk of a liquidity crunch, but the payoff is really high, and that person's not even taking any risk. You just, maybe you're losing a little bit of use of money, but you've got all those bids in there in case you get it. Yeah, it's well played.
Yeah. All right. Well, listen, Willy, appreciate the update. I'm confident, man. I feel like we're in recovery. It's going to be interesting. Rest of the year. It'll be an interesting month. I wonder what we'll be talking about next month. We've had some crazy last few months. We've had so much to talk about.
Oh no, it's just it's an unpredictable. We've not been in these waters before. It's uncharted.
Yes, man. Well, listen, I'm going to let you get back to your family, and at some point, I'm going to see you again in person. Hopefully,
hopefully,
all this COVID shit's over. We'll get to hang out and celebrate. We call it wetting the baby's head here. I don't know if you have a similar thing, but it's you go out and get drunk, celebrate the birth of a child.
Oh, that sounds great. We could maybe have tequilas on the edge of a volcano or something,
Dude, one drink I cannot have is tequila. I'll have anything else. It's that one drink. When you're like 13 and there's one drink you get wasted on and the world ends and you vomit all night. That was the one I did, and the smell of it, I can't go near it, dude. So I'll have Sambuca. You can have tequila on a volcano.
Okay. That's a deal.
All right, brother. Listen, take care. All the best to your family, and peace out, man.
Okay. Catch you next time.